Hello everyone and welcome to the Quantpedia Explains Trading Strategies video series. Today we will discuss Bitcoin futures expiration trading strategy.
Hello everyone, my name is Radovan Vojtko, I'm CEO and Head of Research at Quantpedia. Today we will discuss seasonal trading strategy. Seasonal trading strategies are quite common. We have nearly 100 of them in our database, so it's 8 to 10% of our database. Seasonal strategies usually try to exploit some inefficiency which is connected to seasonal patterns. It can be days in a month, seasons over the year, etc. etc. I mean, some of the examples are overnight anomalies, anomalies related to Federal Exchange meeting committees, option expiration weeks, turn of the month, etc. etc. Our strategy or our research is related to cryptocurrencies, and what we investigated is the cryptocurrency market dynamics around Bitcoin futures expiration events. Of course, the cryptocurrencies are evolving very rapidly. They build their own trading environment, but cryptocurrencies are connected very closely to traditional finance. One of the ways how they are connected is via the Bitcoin futures, which are listed on CME Group exchange. So you can use these future contracts for portfolio hedging or for speculation. I mean, if you are interested in portfolio hedging, how to hedge the cryptocurrencies, we already have an article about that, but right now we are not discussing the hedging. We will discuss how we can use the information about the Bitcoin futures that are traded on regulated exchanges to actually speculate and build some interesting trading strategy. Because there are those Bitcoin futures and they are listed on regulated exchanges, a lot of the hedge funds and a lot of the big funds from the traditional finance are using those futures because it's easier for them from the tax point, from the legal perspective, etc. etc. So I mean, it's significantly easier for them to use Bitcoin futures than to buy Bitcoin directly or to go and trade Bitcoin on unregulated exchanges like Coinbase or other. Our research is partly inspired by the paper written by Blasco, Corredor and Satrustegay in 2023. The research is called "Is there an expiration effect in the Bitcoin market?" The research paper is about what is the impact of the hour when the Bitcoin futures on the regulated market expires. So what is the price action a few hours before that expiration and a few hours after that expiration? It's a paper that deals with the intraday trading. What is the main takeaway from the paper is that there is significant drift in the prices. There is a pattern that can be visible in intraday data that's related to Bitcoin futures. What is our goal at this moment is not to take a look on intraday. Our goal is to take a look on daily basis and to see if there is a pattern, not just on an intraday basis, but also on a daily basis, so in daily bars. So what we did is that we downloaded data from finance, we downloaded data for Bitcoin spot, and we also downloaded data for Bitcoin ETF, but not for Bitcoin spot ETF, but for Bitcoin futures ETF. I will explain later why we use the futures ETF. So we downloaded those data. What are the important dates? So firstly, the CBOE and CME started the trading of the futures on regulated exchanges on December 10, 2017 and on December 18, 2017. So the CME was the second exchange that started trading the Bitcoin futures. The first exchange was CBOE. The CBOE Bitcoin futures is not longer live, so they discontinued the futures a few years ago, but CME is still alive, still trading, has a huge amount of the liquidity. It's the first future to use for somebody who is from the traditional finance. That's how the futures look like. Of course, there are other futures like perpetual futures on Coinbase, perpetual futures on different cryptocurrency exchanges, but right now we are discussing what is the impact of the traditional finance on the Bitcoin price. Then in 2021, there was a buy YTO ETF from the ProShares that was started. That first ETF on Bitcoin in US market was using the Bitcoin futures as underlying. And then at the beginning of year 2024, we have in US the Bitcoin spot ETFs. Now the question is, what are the impact of those Bitcoin futures on the behavior of the Bitcoin? So we started with a simple subtask. So we plot the spot Bitcoin behavior in a few days before and a few days after the expiration event. So expiration event is day T. So the T is usually the last Friday of the month. This is the day during which Bitcoin futures on a regulated market expires. Here is the pattern the few days before the expiration, and here is the pattern a few days after the expiration. So this is how does the pattern look like over the whole 7 days. So 1 day of the expiration, 3 days before and 3 days after. As we can see, at the day of the expiration, there is significantly positive return. There is also significantly positive return a few days after that. The day D plus 1 is usually Saturday, D plus 2 is usually the Sunday, and D plus 3 is usually the Monday, which is the traditionally trading day on a traditional finance. Saturday and Sunday, usually the market is closed. And D minus 1 is the day before the expiration. So when we take a look on the whole history, on the whole sample, so nearly 7 years, the day before the expiration is significantly negative, and the Monday after the expiration is significantly positive performance for the Bitcoin spot. The question is if there is some difference in how the pattern looked like before the launch of IYTO launch or BITO ETF. What we can see is that there is significant difference, because until the BITO creation, the last expiration was on Friday in September 2021. We have the pattern the same as during the whole sample. So the expiration day is significantly positive, the day before the expiration is significantly negative, and the Monday is significantly positive. But after the spot BITO ETF is created, so in 2021, the pattern flipped. So what does it mean is that after the first Bitcoin ETF, which was actually built on Bitcoin futures, was introduced, there was a difference in the pattern. So the performance during the expiration day was significantly negative. The performance day before the Bitcoin futures expiration was significantly positive, and also the Monday performance is significantly positive still. So there is no difference in the Monday performance, it's just significantly higher, but here we have a significant difference to the price action before. So the introduction of the BITO ETF, which significantly increased the depth of the market, and it also significantly increased the trading volume of the futures, because this ETF is based on the futures, had significant impact on the price action around the expiration. That's on the spot market. Then we try to take a look, how does it look like from the point of the BITO ETF. We check the returns a few days before the expiration, but on the BITO ETF, and few days after the expiration. Once again, the day D is the Friday, usually the last Friday of the month when the futures expire. The D plus 1 is the first day after the expiration, and D minus 1 is the 1 day before the expiration. But these are the trading days. So this is the Monday, and this is usually the first day, and this is the Friday. What we can see here is that there is significantly positive performance the day before the expiration and 1 day after expiration of the futures when we take a look on the performance of the BITO ETF. When we plot the charts, here we have a D plus 1, this is the blue curve, and D minus 1 is the green one curve. The performance is around 10% with a Sharpe ratio of 0.69 or 1.25. I mean, when we combine both of these days together, we have around 20% performance, which is, pretty nice when we understand that we are holding the BITO ETF only 2 days in a month. So we hold the BITO ETF only 1 day before the expiration, usually the first day, and 1 day after expiration, usually the Monday, and we skip the expiration day. So we do not have any position on the expiration day, and we do not have any other position during all of the other days. So when we combine those two lines together, we can have around 20% performance, which is, significantly interesting. The question is, what is the risk? Of course, we have a relatively short sample. So we have only 3 to 4 years for our analysis, because BITO ETF was introduced in 2021 and right now is 2024, so we have only around 3 years of the data. The sample is not very long. Also, another risk can be that the price action can once again change, because in January 2024 the spot ETFs were introduced, and it's probable that those spot ETFs, they will also have some impact on the underlying price action. It's probably needed to monitor the performance around the expiration days for the next few months to see if the pattern, 1 day before the expiration is positive and 1 day after the expiration is positive, still holds, or if there is any change in the pattern that's due to the introduction of the Bitcoin spot ETFs. Now, what is this strategy, or what is this idea similar to, is the option expiration week strategy. The options usually expire in the third week of the month, and there are significant movements around that expiration day. So this expiration effect is not only limited to equities and not only limited to cryptocurrencies, but this expiration effect, it usually happens in all of the other asset classes, but this one strategy is freely available, so I will point you to read something about that if you are interested into these expiration effects. which are part of the seasonal effects. So that's what this strategy reminds to us. So what is the takeaway? I would definitely monitor how the price action looks like around the Bitcoin futures expiration in the next few months. And if the pattern holds, I would not be afraid to trade this strategy because it offers interesting performance. It also doesn't have a very high risk. So I hope that you like this quick video. If you are interested to read more, feel free to read our strategy on our blog. There are a lot of the other links that will direct you to other papers and to other strategies. And I hope that you will join me in the next video. Please do not forget to subscribe and give us a like. Thank you very much.
Are you interested? Then pick another video to learn more, or subscribe to Quantpedia Pro and try how our analytics and reporting significantly save time spent on quantitative research.